All right, guys, we're going to do another Robinhood portfolio update. Right now, the portfolio is up $330. We can take a look at the bottom there. Buying power represents $2,500, so we have plenty of cash to spend just in case the stock goes down. A stock that I really want. Let's take a look for the past week. 2%. For the past month, 1%. And for the past 3 months, I am up 5%. And the past year, I'm up 20%. And my all-time chart reflects 22%. So you guys can tell by the headline of the video that oil has pretty much tanked the portfolio. A lot of oil companies are in a bear market right now, and in general, the whole stock market has collapsed due to that coronavirus I was talking about in the previous video. I had to pretty much evaluate what was going on in the portfolio, and a lot of companies got into some really good, buying opportunities for the portfolio to capitalize on. So again, I'm just moving money around, guys. I'm just trying to push this thing forward here. I have pretty much, I'm just going to say this, I have pretty much abandoned my sort of $100 per month dividend strategy, and the reason why is because I want to focus that on the M1 Finance account. I want to focus that in the Roth IRA because I feel like, I don't know, guys, I feel like in a Roth IRA those dividends aren't going to be taxed, and I just feel like in terms of optimization, I can better profit there if I were to put companies like SPHD in the Roth IRA, and companies like AT&T that pays pretty high dividends. So I've really just been changing the tune here as far as what I'm doing with my trading. The Robinhood portfolio has been changed significantly. It hasn't been changed all too much. I have kept some winners into my portfolio, but the focus that I want to do is get those high dividend paying stocks into the M1 Finance account because it is a Roth IRA and I can see much better compounding there. So let's go ahead and talk about what I've been buying here. Apple is at $321. The market's just recently opened, so my total return is still up 78%. I'm still up $1,000 on the stock. Again, the coronavirus, that virus that's been in China, has really been tanking in the markets. So we can see here January 30th, and then just a straight line down with Apple. It got all the way down to 306, and now Apple is starting to recover. I lost a lot of money in oil, guys, and listen, I'm not a perfect trader by any means. Oil really tanked my portfolio. I think my portfolio, let's take a look here. So due to all the trading, the high amount of tradings in ExxonMobil, RDSB, and that China virus, it tanked the portfolio hard. So I went from 5% all the way down to $31,574. So I needed to make up that loss of profit, and we can quickly see that Disney here is not doing it's not doing very well. Average cost of $136. What I'm doing with the Robinhood portfolio is I'm sort of looking at the fundamentals of the company now. Like, at one point in time, I was just buying dividend stocks. Like, I just like it because it pays high dividends. I like it because, the dividend yield is at 6%, it's at 5%, it's at 4%. Those are the stocks that I normally gravitate to, the sort of high market cap stocks. But recently, I've really been looking just at companies that I understand, sort of like the Buffett approach. Do I understand this company? I don't really care if this company doesn't pay a dividend or not. How are the fundamentals for this company? How is this company going to move forward in time? How is it going to profit in time? And how is this business model going to react to uncertainty down the road? How is these stocks going to react towards future endeavors? So looks like Disney here is tanking. It's down 1%. My average cost is $136 for a total return of $106, and I have pretty much made up my loss with a covered call, I believe, or I did sell a call option. Let's take a look at what I've been talking about here. So I bought a 135 call on 115.21. That's actually a call that's spread out way to the year of January 15, 2021. So I bought that call and then I sold that call. So again, guys, if you don't know how to sell calls or buy options, like I said, I really don't recommend you try to dabble with options if you just don't know what you're doing. But I sold it and I pretty much profit $500 from that call option. So I sold this just before earnings because I was afraid that the coronavirus would drop Disney headlines. I knew they beat the EPS, they beat on revenue, but I was worried about the guidance of Disney. I was worried about their guidance as far as how this coronavirus is pretty much affecting the China parks. So that's the reason why I sold this call option, and I profit about $500. So that pretty much made up the losses for oil tanking my portfolio. That's pretty much what happened. What I did though is I did keep 20 shares of Disney into my portfolio because again, I think Disney is it's definitely going to go past 150. I definitely think that in time. I know guidance was lower in this earnings call because of the virus, but Disney's definitely a long-term play. I like them. 20 stocks, and I think that was probably the last opportunity to buy Disney at 136. It's going to 150. I definitely believe that. So Home Depot, like I said, I'm looking at the fundamentals of the companies that I'm buying right now. Strong fundamentals with Home Depot. I am up 136 for an average cost of 223. So not much to say about them. They do have an earnings call coming up. An earnings preview. I think their EPS is not posted yet, but it's coming up. So let's take a look. Available on February 25th. So in the pre-market, they will be reporting earnings. So Boeing 321, my average cost is 307 and total return is up $140. Boeing had a nasty EPS. They reported negative earnings, which to me that signals tremendous losses within the company right now. Their expected EPS was 147. They did not meet that. In fact, they missed that entirely. And the stock, you would expect the stock to just dip past the support level, which was 300, I believe, but Boeing did not do that. Boeing did something weird, I guess. It didn't dip past my average cost. In fact, the stock, it grew. It grew in percentage. I was wondering what was going on, but I think the fears with Boeing is priced in. It went from 373 all the way down to 309. It actually got to like 300. This graph is really weird, but I think what happened was Boeing's fears was priced in, and a lot of people already knew about Boeing's problems. So when they reported earnings, it wasn't a real shock to anyone that Boeing missed that badly. And the stock, if people say, okay, the stock is pretty much undervalued here, it's down 13%, I'm going to buy into Boeing, and that's what happened. So Boeing went all the way up to 323, and I know a lot of people on Seeking Alpha, they were like, what the heck is going on with this company? How can a company miss on a negative EPS of 255 and this company is going up like 3%? It didn't make any sense, but sometimes in the stock market, that's what happens. Stuff doesn't make sense. Look at Tesla. Tesla's going to like $1,000, and I don't think that there's anything stopping that stock from doing that. I think that the stock is just absolutely imploding here. It's exploding, and it's pretty good to see Tesla longs really capitalize off that stock. So okay, let's keep going in portfolio. Altria. This is another winner in my portfolio. Due to my low average cost with Altria, I know that when they reported earnings, they had a write down of, I think it's a write down of Jewel. They lost another $5 billion or something like that. That was not very good in the stock tank. So a lot of bearish activity with Altria, but my average cost is just so low that I'm still holding it out here. A proven winner. This is more like my speculative stock. Like, I know a lot of people may dabble with penny stocks, but like I said, I don't really trade penny stocks all that much. So I bought Altria. I bought Altria at $40. I had to really time this stock. This stock was really going down. Let's take a look at the graph here. Okay, so the stock went from 58 all the way down to 40. So yeah, I was buying and selling at this point, and then it just kept going down. It was just really scary at one point, but it seems to recover here, and it's going back down again. So good dividend yield on them. Again, the portfolio focus is not entirely centered on dividends anymore. I want those dividends to go into the Roth IRA for optimization. So Texas Instruments 129. My average cost is 123. This stock is overvalued, but I think this stock has very strong fundamentals as far as producing semiconductors and calculators and all the sorts of stuff that they do. Good dividend yield on them. They recently increased their dividend yield. I think that this stock has plenty of room to grow. I have a $140 price target. So Texas Instruments, a very good stock to tag team together with Apple, because I think they do very different things. Apple, they sell those computers and iPads and iPods, and Texas Instruments sells semiconductors and calculators. So very interesting to see there. Facebook 210, they recently reported earnings. Did not really, excite anyone. I know they beat their EPS, but they didn't beat it by much. A lot of people thought that Facebook is like a one-trick pony, so a lot of people sold. Let's take a look at what happened here. Got up to, I don't think that graph's right. Let's take a look at, it's kind of hard to scroll over here. So it got up to 223, and then it dipped all the way down to 204. I wish I would have bought it at 204, but again, strong fundamentals with Facebook. Everybody has a Facebook. Everybody has Instagram. I know Snapchat reported earnings yesterday, and they did not do very well. They actually dipped 12%. So I definitely think Facebook, it may be a little bit overvalued here, but again, I'm looking at the fundamentals of the company. Very strong fundamentals with Facebook and their ad revenue growth. I think that's going to continue, and I definitely think that this stock is not going anywhere. I definitely think it's going to go back up. So Johnson & Johnson 153. I know I talked about this stock in the last video, how I was just sad to sell them off, and I bought right back in. So I'm up $44. Average cost $148. I don't have many things to say about Johnson & Johnson. Everything I said about Johnson & Johnson I have mentioned in the previous video. What can I say? I mean, this stock it's overvalued, but you know what? I got to the point where I was looking at all these stocks, and I'm like, you know what? I just do not care anymore. If I like this company, if you like a company and you're just looking at it and you're like, you know what? I believe in this company. I like this company a lot. It should not matter what price it is. I'm throwing some money into Johnson & Johnson. I like Johnson & Johnson. It's one of my favorite stocks. And, hey, if it goes to zero, whatever. I just do not care anymore. AbbVie, $86. My average cost is very, very low. It's actually over $1,000. Again, 30% gain. They haven't really been having news. I guess a lot of fears with that China virus has really just tanked the stock. Got up all the way to 90, dropped all the way down to 81, and now it's starting to go back up. So I think they have an earnings report coming up. Yes, they do. They have an expected EPS of $2.19. I think they could beat that. I definitely think they can beat that, but it might be close here. Honeywell 176. I have an average cost of 175. I like 3M, but guys, Honeywell is the stock to be in. 3M is reported earnings, and it really, again, it just disappointed a lot of investors as far as what's been going on with 3M. They did have a dividend increase, which is good. They reported a dividend increase, but not a significant dividend increase. I think it was only 2%. 3M is really just not, it's really bearish right now. Let's take a look at 3M. Let's see. I want to see how 3M is doing, because I know the stock has really been struggling here. 160. Okay. So looks like its stock is rebounding. 162 went all the way down to 156. I still think that 3M has very good it's a very good buy here at that 155 mark. I think that's a lot of people are starting to buy into 3M, but I'm going with Honeywell because they're innovating much faster than 3M. They are growing much faster than 3M. I think just yesterday they recently announced a new coolant system that should be interesting to see. But Honeywell, a little bit overvalued here, but I'm going to go with Honeywell. They have actually been on the dip. I think they got all the way down to 172, 171. So it went from 183 to 171 due to that China virus. And Honeywell, like I said, I definitely think Honeywell is just innovating much faster than 3M. They're a very fantastic company that knows where they're going, or knows what they're doing. I like their CEO a lot more than 3M CEO. So I'm going to toss some money into Honeywell here. And like I said, it's only 5% of my portfolio. So it's on the lower side as far as the portfolio diversity, as far as that goes. And I'm just going to see what happens here. Starbucks, it's like Starbucks is tanking. It's down to $87. I am at an average cost of $86. Over this stock is another one of those stocks that are overvalued according to P/E ratio, and I bought Starbucks again because I'm looking at the fundamentals of the company. I know the China virus has really concerned a lot of people as far as Starbucks sales in China, but this stock has very, very strong fundamentals. They're increasing their dividends, which is I like to see. It's just a good stock. I think that it's a little bit pricey here, but again, McDonald's looked very pricey when it was like $87 way back then, and now it's like $210. So for the long haul, if your fundamentals are good and you really want to hold the stock and believe in the stock, buy the stock, I guess. My average cost is 86. I probably could have got it lower than that. It's tanking right now, but I do like Starbucks to go to a $100 price target, and it might go beyond that should the coronavirus be contained. If the coronavirus is sort of just quarantined and it just goes away, I think Starbucks will start to rebound. So Berkshire Hathaway, 226. My average cost is 223 for a total return of $29. So Berkshire Hathaway, this is an interesting company because it acts like an ETF. This is in general Warren Buffett's portfolio. I bought Berkshire Hathaway because it pretty much glues the portfolio together as far as my changes. I know I have been sort of I've been watching sort of just ignoring oil and just trying to get into bank stocks and all the stocks that I really want to get into as far as like completing my diversification. But Berkshire Hathaway is a glue piece. It's very heavy on banks. They have a ton of cash. They're sitting on a pile of cash right now. I think they're sitting on like $100 billion. Warren Buffett hasn't really bought anything due to the acceleration of the stock market. The stock market is at all-time highs. Berkshire Hathaway continues to impress me as far as their money management and their portfolio. I know they're doing some interesting things like adding Amazon to the portfolio, which has really Amazon had really great earnings. They just absolutely killed it with earnings. But this is a company that's going to glue my portfolio together. And, I'm not really exposed to bank stocks all that much. I'm not heavy on bank stocks. In fact, I don't have any bank stocks in the portfolio. So that's another reason why I bought Berkshire Hathaway, due to their high exposure to bank stocks and their cash reserves is just ridiculous right now. They're sitting on like $100 billion. And, it's a good company. It's a good company to just hold and park some money in. I parked it about $2,000, and we'll see where Berkshire Hathaway goes in the future. So I think that was it for the portfolio. I'm looking at Microsoft here. Again, guys, I have about $2,523 of cash worth to spend. I lost a lot of money in oil. Oil has tanked my portfolio, but due to a Disney options call, I was able to recover that money back. And I think that's the power of options that I really like. See, one options contract is worth 100 shares. So I bought this contract only at $1,340, and I was able to sell this contract at $1,825. Now, if you take a look at how many shares it takes to buy 100 shares of Disney, that's $14,000, guys. That's a lot of money to be placing in Disney if you want to buy 100 shares of this company. I only put $1,000 into this company, and I was able to profit $500 quickly. So I pretty much made up the losses for my portfolio due through that one trade. So again, options is a really powerful and reliable asset if you know what you're doing. And I sold the contract for Disney because I was just worried about their guidance due to the coronavirus, but I still held on to my shares. So I bought the contract at 136, I think, and I bought 20 shares of Disney at 136, and then I sold the contract just before earnings to collect a premium. So again, options is a very powerful strategy to use. I might be doing some Microsoft call options because Microsoft is just extremely bullish right now. The way I like to do my options is I always buy like a year out, because even though it's more expensive to do that, it's more safe as far as holding the contract and be able to profit it for months and months on. So again, options is really hard to explain, guys. It's just something that you need to know how to do. Let's take a look at one options one buy Microsoft options call is worth $1,770. So it really is interesting to see how you can use options to make up the losses for your portfolio. But I think I'm not going to do that. I think I'm just going to see what the markets are going to do here. This is now my portfolio, guys. Again, I have abandoned my strategy of the $100 dividends per month, and I really want to transfer that strategy over to the M1 Finance account, the Roth IRA, because the dividends won't be taxed. I can optimize things better over there. I could put SPHD over into the Roth IRA. I could put stuff like realty income into that portfolio. AT&T, I could put them over there. I can do a lot of stuff over there. So yeah, right now buying power, we're just going to sit on $2,000, and I think that's going to be it for the portfolio. I don't really have much to talk about, guys. Let's take a look at Tesla. Let's see how Tesla's doing. Let's see. So it looks like Tesla is starting to be, the shorts are winning with Tesla. I know it got all the way up to about $961, and then the drop. So there may have been some news they may have came out with Tesla. Let's take it the market wise. Tesla stock pulls back as okay. Let's see. GM. Okay, so yeah, that's a lot of stuff. There's a lot of stuff going on in the markets right now, guys. I'm quickly take a look at GM. Let's take a look at GM. Yeah, they were up. They were up in the pre-market, so 35.28, and now the stock is tanking. So maybe guidance got cut. I really don't know. I don't own GM, so interesting to see. Yeah, that's it for my portfolio, guys. Thanks for watching. I hope everyone has a great trading day. Right now, the portfolio is up on 1% and $32,656. We were able to make up our losses for the oil dip. And I really like how I've just focused the companies that I really want as far as the fundamentals. There's some dividend plays here like Altria. I know Boeing's increasing their dividend. Home Depot, everybody likes Home Depot. Disney, but I'm just gonna see what's gonna happen here. Thanks for watching, guys. Hope everyone has a great trading day, and I'll see you guys next time.